I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a financial expert, a financial analyst that is an expert, particularly in gold and silver, and also the Federal Reserve. He has a new book out. I just want to show you. It's an ebook. So, I printed it off here. It's a thick book, folks. I mean, it's a lot to it. Conversations with God about gold and silver. Conversation with God about gold and silver. And it's the book series that Bix Weir has come up with, and it's called The Road Awakens by Bix Weir. Here's the cover art of it. You can find it on his fine site. Bix Weir, thank you for joining us today on USAWatchdog.com.
Hey, Greg, thanks for having me. There's a lot to talk about these days.
Yeah, your site, theroadtoruta.com. Roadtoruta.com. Bix Weir, your site. You've had it up for about 6 years. You were formerly with GATA, the Gold Antitrust Action Committee. You know a lot about gold. You know a lot about silver. I know you specialize particularly in silver. And you know a lot about the economy. And I say this all the time about people who are in the gold market or who comment on the gold market and are writers about the gold market, is that you can't just be, in the gold market. With the gold market, it just reflects off everything, so you have to know a lot about a lot of things. And that's why I want to have you. I want to start, before we start with your book, and get a few comments about that. Where do you think we are right now in this arc of collapse, which you and a lot of other people say we're headed for?
Well, right now, all eyes are on the derivative banks. Deutsche Bank, Standard Chartered, J.P. Morgan, Citibank. The problems that are going on with these banks are so big, they literally could take down the system. And if you look at their share prices, Deutsche Bank down 50%, J.P. Morgan down 20%, Citibank down 30%, Standard Chartered down 50%. Banks can't go down. That's the whole concept behind fractional reserve banking, is you have to keep growing those assets, growing the value, or the opposite happens, where it's good to get leverage going up because you make 10 to 20 times what you would have made, but coming down you're going to lose 10 to 20 times what you should have lost. So that's the problem right now, is these banks are not marking to market their assets that they have on the books, especially gold, or especially oil. And when those marks come in, probably within the first quarter, and then in April, they need to pull lines of credit from oil and gas companies. That's when it's going to get really, really ugly, because, again, when asset values shrink, the banks lose exponentially.
Deutsche Bank has 70+ trillion in derivatives. Now, let's keep using that one metric, because it's the biggest bank, basically the most powerful bank in Europe, definitely the biggest bank in Germany. Germany's economy is 3.8 trillion. And they got more than 70 trillion in leverage and debt debts. And if you take a look at Deutsche Bank and you put it on a chart 18 months, before Lehman went under, it looks about the same. It's the same, pattern going down. So do you think that could be the daisy chain, Deutsche Bank, or any big bank? Citigroup is warning of a recession last week, and they're making some pretty hefty warnings of recession. Could any one of these big banks with leverage, American or European, take the whole system down?
Oh, every single one of them. If you look at, comparing Lehman to Deutsche Bank, Lehman's derivative book wasn't even close to the size of Deutsche Bank, and yet they're having the same problems. They fired both their CEOs last year, and now they're worried about their bonds, and they call them COCO bonds. They're contingent collateralized bonds that if they hit a certain level of their Tier 1 capital, all those bonds turn into equity, basically wiping out the bondholder. It's really, really getting ugly out there. So that's basically what's happening, is Deutsche Bank's Tier 1 capital is eroding. They're losing on their derivative bets. And don't forget, if you have 70 trillion in derivative bets, that's 70 trillion in counterparty risk as well. So every other person that placed a bet, they aren't betting with themselves. They're betting with everybody else, with J.P. Morgan, with Citibank. So all it takes is one of these banks, and banking is the lifeblood of the economy and the way we run these days. One of these big banks go, and you can kiss everything goodbye. And that's what I've been preaching for a long time, and we are really seeing it now.
Do you think that's where you're saying that's going to be a total collapse, and you're saying it's going to center around the derivatives? Is this one of your special focuses that you're looking at, that you think this is where the not so black swan is going to come from? Because we know about the problem; it's a massive problem.
Oh, definitely, and it's one of those things. How did the derivative market get so big? It goes back to Larry Summers and Alan Greenspan in the late '90s telling Congress, "Hey, we don't want any regulations on derivative." They did it all on purpose. They wanted to blow this bubble so big that when the stuff hits the fan, no one's going to survive it. And truthfully, if you're looking at in the hundreds of trillions of dollars worth of derivative implosions, there's nothing that can survive that. Not your local bank, not your state-run bank. Everybody's saying, well, it's time for the reset. That's great, but there's going to be winners and losers when this happens, and the winners, unfortunately, are going to be the ones with the most debt, which is pretty much everybody, because the debt will be wiped away with the assets.
Well, when you say that there's nowhere to hide, that local banks and banks that really aren't connected with the big banks are going to go down too, how does that happen? Explain that.
Well, we almost saw it in 2008. Had Hank Paulson not gotten the $700 billion from Congress, the bailout basically, what would have happened is everybody would have run to their bank and tried to get their money out. And we all know that the banks are leveraged, 10, 15 to 1, and they don't hold your money there. It's like It's a Wonderful Life. Your money's in Joe's house and in Fred's house. You're lending the money to him to get paid back someday. That's the whole concept of these big banks crashing. And it also these big banks crashing takes out a lot of the big companies because they all bank with them. If J.P. Morgan goes down, you're going to see pretty much everybody who banks with J.P. Morgan go down as well, because they'll take their wealth with them. They see all the assets that they own and the deposits that they own as their money to play with, and that's the problem. When that money goes away and people go to their ATM to get money out, everybody in the world will do it. We saw it in Greece. When the Greek banks started to struggle, every bank struggled because people would wander into the bank and say, I want my money. And
so having some cash, some euros, some dollars, some reals, rupees, this is going to be a global problem, correct?
Oh yeah, and I do believe it has already started in Europe. The Italian banks are a mess, and they're going to need a bailout. And if they get a bailout, the Portuguese banks get a bailout, the Greek banks get a bailout. Everybody's waiting in line for a bailout, and then you have the largest bank in Europe, Deutsche Bank, saying, "Hey, we're going to need a bailout too." Where does it end? It really ends when they go back to Congress in the U.S. and say, "We need another bailout for the banks." I don't think the people will allow it this time. I think it's been set up such that they won't allow it, because it won't be $700 billion. It will be 7 to 10 trillion, and you're not going to see it happen this time.
Well, that's what it was. Was it David Ray of UMKC, professor of economics? I mean, he had this back in December of 11, said that was 29 trillion back then. Captain Austin Fitts says it's about 40 trillion. I mean, we had a big bailout then, right?
Oh yeah, and they told Congress we only need 700 billion, but then banks create money, so they give them 700 billion. They're going to leverage and lend out and cover their losses to 20 trillion, and then the Federal Reserve also did backdoor bailouts to European banks. And Ron Paul grilled Bernanke on this, and they didn't even know who they were giving money to. They were just spreading money all over the place trying to stop the crash.
Do you think cash is going to be a good thing to hold, and it's going to work well, at least for a short period of time?
Probably not, because most people don't hold any cash.
But do you think they should get some cash just because it'll work for 3 weeks or 3 months or something?
Yeah, that's how sad it's getting. 3 weeks. Yes. My recommendations have always been, physical silver in your own possession. Maybe a little bit of gold, not much. Silver will be a better investment, but some physical cash, because people are used to that. Your ATMs won't work, your Visa cards won't work. All that stuff will be on hold, because that requires the solvency of the bank behind it, and the banks will be insolvent. So you're not going to be able to get anything monetarily out of the banks until they kind of rejigger the system and wipe out all these bad debts, which is a huge amount, in the hundreds of trillions. So we really are approaching that start fresh time again. The question is, what day is it going to happen?
Which is my next question. You were talking about April. Why do you come up with the April time frame?
Well, the banks are already starting to struggle right now, and supposedly the Federal Reserve Bank of Dallas told the banks not to write down the oil and gas assets yet in December, and that's basically telling the banks to cook their books. Now the Fed Dallas denies it, and Zero Hedge put a Freedom of Information Act in to try to get the minutes from that meeting, but they did it because now all of a sudden the banks are starting to write down their oil and gas assets. J.P. Morgan just last week came out with $850 million of extra reserves that they had to take. It was only a month ago that they said they didn't need to take more reserves. So a lot is going on behind the scenes, and now is the time. You need to get your final preparations ready.
I was watching CNBC last week. I was watching the European version. I think the European version is better than the American version, frankly. But I will say they had a guy on there grilling, and he was talking out of both sides of his mouth. One side he says, "Oh, the system's stronger." I mean, well, we grew the debt in the world since 2008. The system's stronger. I said we grew the debt by nearly 60 trillion. What do you mean it's stronger? The interviewer, an English guy, nice guy, but he said, the oil and gas is only about 2% of the loans that the banks have. Why is that such a big deal? That was his question, and it was rhetorical. And so I'm going to ask you as a real question: if it's only, as CNBC said last week, it's only a couple of percent of the bank's overall exposure, why is it a big deal?
Because they're running on such very, very thin margins. I mean, all it takes is a $5 or $10 billion hit to really scale back the Tier 1 capital. And when they do that, what do they have to do? They have to sell other assets or raise capital some other way. So it starts snowballing on each other. The sale of assets, that's what's happening right now in the oil and gas space. Everybody in oil and gas is trying to survive, keep their head above water. And the way they do that, the banks aren't really lending to them anymore. So they're either selling off properties, with everybody selling at the same time, the asset values go down. And the price of oil and gas is being rigged lower and lower to help in the destruction of the system. So yeah, it is a much bigger thing than people say and think. And that number, 2%, I don't know where they got it, but if you count the derivatives attached to oil and gas, you can crank that up. Oil and gas are the largest commodity traded in the world in terms of dollar amounts. That's why oil is so important. That's why we set up the petrodollar and all that. In terms, I think it's $3 trillion a year is traded in oil and gas. And what does that do? That forces the rest of the world to hold U.S. dollars. And that was the whole idea. That's why the U.S. cares whether or not oil and gas is healthy and high, because it forces other people to hold U.S. dollars, which keeps the dollar strong.
And you're saying on top of that $3 trillion trade, there might be 30 trillion or 300 trillion or who knows how many trillions of dollars of derivatives piled on top of that. Is that what you're saying?
Yeah, nobody knows the amount of derivatives piled on top of all commodities. We've done estimates on silver, for example. I can tell you that over 300 billion ounces of electronic silver are traded every year. That's crazy.
Billion, well, that's a fraction of. That's an orders of magnitude what's mined.
Exactly. Well, not even what's mined. What's been mined in the history of the world. 300 trillion, and the numbers are right there. The LBMA and the COMEX and all the other exchanges, these are electronic trades going back and forth, setting the price of a real asset. Same thing goes on in the oil and gas market and in all commodities.
And back to my question. So why the April time frame? You're saying, well, it's going to get really ugly come April. Is that when they're going to be forced to, in the second quarter? Is that the second quarter coming up, April?
Well, I'm saying March, April. Between now and April, it's going to get really ugly. And the reason is, first of all, the banks just in last year were saying, oh, everything's fine. Well, now they're starting to say, well, maybe everything's not fine in the oil and gas space. We're going to have to take some write-downs. They do that. They pre-announce it before their earnings. And then their earnings are released in the April timeframe after the first quarter. What also happens in April for oil and gas is that every year in April, the banks look at their oil and gas loans and letters of credit and things like that. And there's certain metrics that these oil and gas companies have to meet to renew these loans and lines of credit and things like that, and they're not even close to the metrics. So what the banks have to do, and this is what they stopped them doing in December, after the end of the first quarter, the banks are going to have to go cut off these oil and gas companies, which is 50 times worse because these companies are on their knees already.
So go ahead.
That's how the snowball really starts rolling. And, you can name 50 other problems there are out there. I'm just hoping they don't start a war to get past all this stuff by diverting the attention away from the economic problems.
You're not the only person that's brought up the war card. There are a lot of people.
Well, they do it every time, so it's, will they get away with it this time? I'm not so sure because I think there are people, especially within the United States, that are trying to stop the insanity that's going on right now.
So you think the big problem that you see are derivatives, oil, and gas in the banks. Those four things combined are making the perfect storm of possible implosion, and in the not so distant future.
Yes, and I mean those are the big ones, but you can add 20 other things to those. Silver and gold prices. I mean, you're looking at the U.S. Mint is still holding back on producing silver to the Silver Eagle to meet demand, which is completely illegal. No matter if Treasury Secretary Lew, they changed the law so Jack Lew can decide, but his decision has to be based on the demand from outside, not on his personal desire to keep the amount of Silver Eagles out of circulation.
And what do you think about the price action? It's silver hasn't gone up that much, but gold, it was a low, 1050 or something in December, and then silver's come up some. What do you think about the price action in gold and silver? What's it telling you, or is it just a little blip that's inconsequential? What do you think?
It is. It's been inconsequential since they started rigging it in the 70s. They could place the price at $0 an ounce or $1 million an ounce with a click of a mouse. That's how powerful this market rigging is, and it's done out of the Fed and out of the Treasury. There's a trading desk in the basement of the Treasury. That's where they run it all, and they use their bullion banks. They don't need physical silver and physical gold to rig the price down to zero, or the alternative, they could also rig the price to $1 million an ounce, literally with the click of a mouse. And an interesting point is that J.P. Morgan supposedly is loading up on physical, according to Ted Butler, and they have apparently 500 million ounces, just a huge amount of silver. Well, if all their other problems go sideways, what's to stop J.P. Morgan from clicking that button and saying, okay, now silver's worth $1 million an ounce?
I am of the mind that at some point they're going to turn this around the other way. I mean, I think they're going to turn it around the other way and try to make tons of money. You like silver, and the reason why you like silver is because it gets used up. A lot of it is gone. Gold doesn't get used up. Whatever was mined is there, and there's some people out there who say there's actually less above ground silver right now than ever in history, and less than gold. Tell me why you like silver more than gold, and what you think the price will do.
Oh, it's absolutely true. Silver it's got a dual function. It functions as an industrial commodity, which it has since probably the 1940s and 50s when electronics were being introduced. So a lot of it's consumed on the industrial side, and you can make a case that, hey, the uses of silver are going through the roof. And then you have the monetary side. The monetary side has pretty much been dead since we went off the silver standard, or kind of went off it, but in the 1960s. Well, who gets to decide that? Why does the U.S. and the Bank of England get to decide what we use as money? Silver has been used as money for 5,000 years, even more than gold has been used as money. And right now we're looking at above ground silver and above ground gold. They're both around 6 billion ounces each, total, not just coins, but jewelry and teapots and everything. There's your question. Why is there an 80-to-1 ratio silver to gold? I'll tell you exactly why. It's the computers and the market rigging that's been going on since the 1970s, since Alan Greenspan invented the first computer programs to rig the markets. I've proved it 100 times, and one day it'll come out and everybody will say, wow, Bix was right about that road to Ruta stuff, that the Fed told him that it was Alan Greenspan that invented the first computer models to rig markets. It's true, and everybody who follows my research is finally coming around saying, Okay, yeah, it looks like they have been rigging the markets for a very long time.
Oh, it's pretty much proven. I mean, I remember 3 or 4 years ago, you'd bring that up, and people would, they fold you a little tinfoil hat and give it to you. And,
I have plenty of those.
and now they rigged LIBOR. They've proven they've pled guilty. They've rigged the forex market, which means they rigged the precious metals markets. They pled guilty. I mean, so it's pretty foregone conclusion. How high do you think the price of silver will go? I mean, in dollar terms.
I think silver will be the last released. That's the problem. It will be last released from manipulation because it's so important. I write in my book that this is a national security issue. The price of silver is completely a national security issue. They used it was somewhere around 400 to 500 million ounces to build the first atom bomb, and they didn't tell anybody about it. There's books written on it saying we secretly took it out of the U.S. Treasury because it made such a good magnet. All these things that the U.S. does is to protect the U.S. dollar, the fiat system. Behind the scenes, they have the rule of law to literally fix any market they want. And they do it, and they have been doing it. So if you want a price in U.S. dollar terms, today, I would say 1-to-1, the price of gold and the price of silver will cross at some point until the shakeout is done. And then I say it's a 4-to-1 ratio. Then you get to, okay, well, what's the dollar going to be worth? That's the big question. What's fiat money going to be worth after the banks crash?
And what do you say to people? Because I get this a lot. Well, they can just manipulate it, in perpetuity. They can manipulate it as long and as far into the future as they want. And I have actually told people they can as long as the dollar's worth something. Now, what do you say?
Well, I think they can, and they have, and they will, as long as it's in the U.S. advantage. Because it's been our advantage to run this unbacked fiat system. We've been the world's reserve currency for a long time. Now we're the largest debtor nation in the world. Now we have all these problems with currencies. It's turning into a place where it's no longer our advantage. And like I said, with a click of a mouse, we can end this game.
Oh, you're saying we're just like, hey, y'all, thanks for the money, bye-bye, boom. And then that's what you're saying, that the end result is we're just going to have a huge default on our debt. Is that what you're – please explain that.
We'll have a default on our monetary system. I mean, yes, it's a default on a debt, but it won't be just the U.S. It'll be everybody, and it'll be blamed on the banks. And they've set it up that way. They gave the banks enough rope to hang themselves. And what it's going to do is going to get rid of all this debt. And the problem in the world now is debt. And the only way to pay debt back in a fiat monetary system is to expand the bubble. And now we're hitting that moment in time. There will be people angry at the U.S. because people used to ask me about China. Well, China won't be all that mad. Yeah, they have a lot of U.S. debt, but we've also built their infrastructure. We've built buildings and factories and power plants in China. They'll just close their doors and say, hey, we have plenty of customers. We'll just take all your factories and we'll call it even. That type of thing is going to go on. People are going to become very nationalistic. It's already started in the U.S. with, the things that are going on with Trump and things like that. Yes, we will become nationalistic. We will shut our borders when this crash happens. But it's the only way to get rid of the mess, because you and I know this mess is completely out of control.
Yeah, we'll never pay this
way
off.
Out.
Go ahead.
There's no way out. There's no way to pay off. The idea was never to pay off the debt. The idea, and I talk about this a lot, this comes directly from the Federal Reserve Bank of Boston, and it comes from a economic paper called On the Road to the Golden Age. And the only way, this is the 1960s Nobel Prize winning paper, the only way to get back to a gold standard when you leave a gold standard is to print money as in largest amounts as you can, to infinity, collapse the system, and then go back to the gold standard. And that's what they've been doing.
Which brings me to your book, which you already talked a little bit about your book. I mean, a lot of what you're talking about is in your book. But I did, go through it. This conversation with God it's very clever. Very, very clever conversation with God about gold and silver. This is a book series. This is the book 3, The Road Awakens, book Bix Weir. And of course, it's heavy, Bix, very thick. But I want to come up with one of your points in the book, and I think this is really brilliant because it's simple. People are asleep right now. I'm going to oversimplify your deal here, but people are asleep right now, and when they awake, that will equal chaos. Let's just talk about that. And there's another point. I want to talk about these points, and then the chaos will equal transition, and the transition is going to be violent. So let's start with people are asleep, and when they awake, it's going to equal chaos. Tell me about that.
Well, that's kind of the key that a lot of us in the know people who talk about the things we're talking about today, are wondering, well, how will the people wake up? When will they get off their couch? And when will they stop, thinking the Kardashians is the most important thing in the world? The moment that happens is when the banks fail and they go to their ATMs. And they are going to be very angry that first of all, they weren't knowledgeable about the banking system and what was going on. But second of all, they'll believe that these banks will have stolen their life savings. And I don't care if it's 5 cents or $500 million, everybody will be in the same boat. That's when people wake up in mass amount. Now,
I think that's the most dangerous point in history. As I was talking to a friend of mine saying, you and I, we're in a herd of thousands of people, and you and I have looked up. Did you hear that? Yeah, I did hear that. Well, let's move over. I've already, but there's all these people out grazing, and they're just couldn't, they're into the Super Bowl, and hey, wow, the Panthers lost. That's your chaos moment when we have a mass awakening. Correct?
Chaos, yes. Now the question is how much chaos. The U.S. has had plans in place to deal with this since the 1970s. There's actually papers been written on it. A lot of it's kind of hidden. If you read information on NESRA, the National Economic Stability and Recovery Act that supposedly Clinton signed into law and Reagan had endorsed back in the day, that's one way to get through it. I don't think any of the new plans of the current leaders are going to work. I think we do have to have a crash of the system. Alan Greenspan's plan was to, after the system crashes, reallocate money according to what you put into Social Security, which is a very interesting concept because it basically gives the people who've worked the hardest the most, but everybody gets something, and it caps those multi-rich people because you don't pay into Social Security over like $100,000 or something like that. There's a lot of different ideas, but it'll be the idea that has the least deciders. Because what gets destroyed is trust. And once trust is destroyed, the people who destroyed the trust, our current leaders, won't be the ones putting it back together.
Yeah, in gold and silver, you don't need confidence and trust with gold and silver. It's universal.
As long as you have it in your hands, in your own possession. I've been screaming this for over 10 years. There's a big difference between a stock in a mining company, gold and silver in an ETF, gold and silver at a vault that somebody else has, and gold and silver in your hand, that if everything shuts down, you have that. Huge difference.
A mass awakening equals chaos, and chaos equals transition. Let's talk about chaos equals transition.
Well, sure. Obviously, if the fiat money system fails with the implosion of the derivative system and implosion of the banks, you're going to see chaos. Now, yes, the United States has over 330 million guns, more guns per person than any country in the world. Is it good or bad to have a lot of guns? I think it's good to have a lot of guns because at least you have some defense of the bad people that have guns. People who want to take over. The government, the people who control the government will surely try to take power and control of the United States. And that's kind of a key also. Will the citizens of the United States wake up enough to say, no, we're not going to turn to our government this time. We're going to take care of it ourselves. And as a fact, we're going to take out these criminals that have been leading us. And they'll see it as an opportunity to take power from the people.
Is the question, are we going to have a we the people moment?
Oh, definitely. And it will be played out on TV in front of Congress. And it'll be that very moment that Jack Lew, the U.S. Treasury Secretary, goes to Congress and says, we have to bail out the system. We're going to need $8 trillion, and Congress has to approve it. And if Congress does approve it, we're talking about the bad guys winning. The control apparatus will stay in place. It'll just happen again and again, over and over, and then all our freedoms and liberties will be gone. If Congress says no, and the people will be the ones telling Congress what to do this time, because the people have been trained and taught over the last 7 years that the bailout was bad. Ask anybody, walk down the street, hey, what do you think of that banker bailout that happened a few years ago? They'll say, I can't believe they got away with it.
99 out of 100 thumbs down for sure.
Yeah.
Unless you run into a banker.
So that will be a high drama moment, and all it is, it's a single vote in Congress, whether or not we go back to what we believe in our Constitution and fight for our liberty, or we fall into the hands of the state and all that entails. And
what are you betting?
Give up everything.
What are you betting?
Oh, I know that the people will, when they lose their checking account and savings account, they're going to go to Congress and says, you're not going to bail out anybody, especially the banks. And if you don't bail out the banks, nobody has anything, because that links to the savings account, checking account, 401k money, the stock certificate scandal that right now is just out of control. All this stuff is linked together. So you can pretty much kiss it all goodbye, and then we get to start fresh based on, we're going to have to put in new leaders. And there are some, I think, that will rise from the ashes.
It's a lot in your book. It's very clever, a conversation. It's a back and forth, me and God. God's a bold upper-face print. It's your book right here. You can see it. The Road Awakens by Bix Weir. You just a thumbprint of it. Awake equals mass awakening equals chaos. Chaos equals transition. You can get it on your website, roadtoruta.com. Bix Weir, thank you for joining us today and explaining your book on usawatchdog.com.
Thank you, Greg.